Have you ever looked at your bank account and just felt poor? You're working the same job. Maybe you even got a small raise, but your paycheck just doesn't seem to stretch as far as it used to. There was no layoff notice, no official pay cut, but somehow you've got less money at the end of the month. If this sounds familiar, I want you to know you are not imagining it. This is a real phenomenon happening to millions of people right now. And today, we're going to break down exactly why your take-home pay is quietly getting smaller. First, let's get clear on what we're talking about. When you get a job offer, they tell you your salary, right? That big, impressive number is your gross pay, but that's not the money you actually get to live on. The number that truly matters is your net pay, or your take-home pay. This is the amount that actually hits your bank account after all the deductions are taken out. We're talking about federal and state taxes, Social Security, Medicare, health insurance premiums, retirement contributions, and any other benefits you might have. And it's this final number, the one you use to pay your rent, buy groceries, and live your life, that's getting squeezed. So let's dive into the 4 big reasons why this is happening. The first reason is something I like to call tax and withholding creep. Now, this isn't about some big new tax law being passed. It's much more subtle. One of the biggest culprits is bracket creep. Let's say you get a small cost of living raise. That little bump in pay might be just enough to push you into a slightly higher tax bracket. So, while you technically make more money, a larger percentage of it is now being withheld for taxes, which can leave your take-home pay feeling stagnant or even lower. On top of that, payroll tax calculations can change from year to year. Small adjustments by the government, or even your state and local authorities, can alter how much is taken out of each check. And here's another thing. Many people used to rely on a big tax refund at the end of the year as a form of forced savings. With recent changes to withholding tables, those refunds have gotten smaller for many, meaning that lump sum of cash they were counting on just isn't there anymore. This isn't a political statement. It's just the structural reality of how payroll systems work. The second major reason your paycheck feels lighter is that your benefits are eating more of it. Employee benefits like health insurance are fantastic, but their costs have been soaring for years. And more employers are quietly passing those increased costs onto you, the employee. Maybe you've noticed your health insurance premium went up a bit this year. Or maybe the premium stayed the same. But your deductible, the amount you have to pay out of pocket before insurance kicks in, shot up. Suddenly, that trip to the doctor costs you a lot more. Perhaps your company used to fully cover vision and dental, and now you have to chip in. We're also seeing some companies freeze or reduce their 401k matching contributions. The bottom line is, you're often paying more money for the exact same level of protection you had last year. So even if your gross salary stays the same, the higher cost of benefits means less money in your pocket. Reason number 3 is the one we all feel every single day: inflation. Here's the critical thing to understand. Inflation doesn't wait for you to get a raise. It hits your take-home pay immediately. Your landlord sends that lease renewal, and your rent is up by $100 or $200. You go to the grocery store, and the same cart of food that cost you $100 last year is now $120. Utility bills, car insurance, gas for your car, all of these essential costs have spiked. And here's the tough truth about inflation. Even when the rate of inflation slows down, it doesn't mean prices go back to what they were. It just means they're increasing a little more slowly. Those higher prices for rent, food, and gas are sticky. They tend to stay. So the purchasing power of your take-home pay has been permanently reduced, making every dollar you earn feel less valuable. The fourth reason is a bit more subtle and speaks to what's happening in the broader economy. Companies are finding ways to cut costs without actually cutting jobs. As the silent squeeze phase. Instead of layoffs, which are bad for morale and public relations, they're doing other things. Maybe they're cutting back on overtime hours, which a lot of people rely on to make ends meet. Maybe that annual bonus you were expecting just didn't materialize this year. Or perhaps they've implemented a company-wide freeze on raises. You're still employed, but your potential to earn more has been capped. In some cases, people are even being asked to take on more responsibilities, essentially doing the work of 1.5 people for the same pay, especially if a colleague leaves and isn't replaced due to a hiring freeze. Your job is secure, but your financial progress has stalled, and that directly impacts how much money you have. So, with all these pressures mounting, what are people actually doing to cope? The reality isn't pretty, and it explains a lot about the world we're living in right now. We're seeing a massive rise in the gig economy and side hustles. People are driving for rideshare apps after their 9 to 5, delivering food on weekends, or picking up freelance projects online. This isn't about passion projects. For many, it's about necessity. It's about earning that extra few $100s a month just to cover the bills. Beyond that, people are making tough choices. They're cutting back on saving for retirement or for a down payment on a house. They're increasingly using credit cards to pay for everyday essentials like groceries, pushing them into debt. We're also seeing people delay big life decisions, putting off getting married, having children, or moving out on their own because they just can't afford it. It's important to recognize this isn't about glorifying hustle culture. It's about acknowledging the real-world burnout and stress that comes from having to constantly work just to stay afloat. So, what does all this mean going forward? The most important message I want you to take away is that this is a transitional phase, not a moment to panic. It's a time for awareness and strategic thinking. First, it's realistic to expect that our paychecks may stay under pressure for a while. The economic forces we've discussed aren't going to disappear overnight. This means that right now, job security might actually be more valuable than a small raise at a less stable company. Second, flexibility is becoming the new currency. A job that allows for remote work could save you thousands a year in commuting costs. A position with a predictable schedule might give you the time you need for a side gig. These kinds of benefits have a real, tangible financial value that might outweigh a slightly higher salary at a more demanding job. Ultimately, awareness is power. Understanding why you feel this financial squeeze helps you move from feeling like a victim of circumstances to someone who can make proactive decisions. If this all feels incredibly familiar, please know that you are not alone. This is the shared economic reality for so many of us right now. The first step is understanding the why behind it all. By knowing where the pressure is coming from, whether it's taxes, benefits, inflation, or company cutbacks, you can start to strategize. You can review your budget, reevaluate your job, and make conscious choices about your finances and your career. It's not easy, but you have more control than you think. Thanks for watching. If you found this helpful, please consider liking the video and subscribing for more content that helps you navigate your career and finances. See you in the next one.